In the wake of President Donald Trump's recent tariff announcements on April 2, 2025, the financial markets have experienced significant volatility. The introduction of a universal 10% tariff on all imports, with higher rates for specific countries, most notably a cumulative 54% tariff on Chinese goods, has prompted investors to reassess their portfolios. The immediate market reaction was stark, with the Dow Jones Industrial Average plunging 1,679 points, marking its most severe decline since 2020. Turn 0 Search 3. Amidst this turbulence, certain stocks have demonstrated resilience or potential for growth, positioning them as viable considerations for investors seeking stability and opportunity. Here are 10 such stocks. Procter and Gamble. Procter and Gamble, a stalwart in the consumer staples sector, has shown remarkable stability. Its extensive portfolio of essential household products grants it substantial pricing power, enabling the company to navigate economic downturns effectively. In the current climate, Procter and Gamble's shares have experienced a modest decline of approximately 5.5% from the previous close, reflecting its defensive nature. Turn 0 News 22. Coca-Cola. Coca-Cola's global brand recognition and diversified product line render it a defensive asset during periods of economic uncertainty. Despite a 14.5% decrease in its stock price from the previous close, the company's consistent demand and strategic market positioning suggest a capacity to withstand tariff-induced pressures. Turn 0 News 23. Walmart. As a leading retailer with a significant emphasis on domestic sourcing, Walmart is strategically positioned to mitigate the impact of increased import costs. The company's stock has declined by 10.5% from the previous close. However, its robust supply chain and focus on affordability may enable it to navigate the challenges posed by the new tariffs effectively. Turn 0 News 20. Costco Wholesale. Costco's membership-based model and emphasis on bulk sales provide a buffer against rising costs associated with tariffs. The company's stock has seen a 5% decrease from the previous close, yet its operational efficiencies and loyal customer base position it well to manage the current economic headwinds. Turn 0 News 20. Johnson & Johnson. Operating in the pharmaceutical and consumer health sectors, Johnson & Johnson offers products that remain in demand regardless of economic fluctuations. With a stock price decline of 4.3% from the previous close, the company's diversified portfolio and global reach provide a measure of stability amid market volatility. Turn 0 News 23. Amgen's prominence in the biotechnology industry, coupled with its minimal reliance on international supply chains, positions it favorably in the current trade environment. The company's stock has declined by 2.5% from the previous close, reflecting its relative insulation from tariff impacts. Turn 0 News 22. TJX Companies. As the parent company of off-price retailers like TJ Maxx and Marshalls, TJX Companies stands to benefit from consumers seeking value during economic downturns. The stock has experienced a 6.1% decrease from the previous close, but the company's business model is well suited to capitalize on shifts in consumer behavior prompted by the current economic climate. Turn 0 News 21. Verizon Communications. Verizon's focus on domestic telecommunication services provides a degree of insulation from international trade disputes. The company's stock has declined by 1.5% from the previous close, underscoring its stability and the essential nature of its services. Turn 0 News 23. AT&T. Similar to Verizon, AT&T benefits from a primarily domestic focus and a subscription-based revenue model. The stock has seen a 2% increase from the previous close, indicating investor confidence in its ability to maintain steady performance amid trade tensions. Turn 0 News 23. Lamb Weston Holdings. Specializing in food production with minimal exposure to tariffs, Lamb Weston has demonstrated resilience in the face of market volatility. The company's stock has risen by 10%, bolstered by its reaffirmed revenue targets and strategic positioning. Turn 0 News 23. Risk management strategies. Investing during periods of heightened market volatility necessitates prudent risk management. Consider the following strategies. Diversification. Allocate investments across various sectors and asset classes to mitigate risk exposure. Emphasis on defensive stocks. Prioritize companies in consumer staples, utilities, and healthcare sectors, as they typically exhibit resilience during economic downturns. Saturn, Zero News 22. Evaluation of company fundamentals. Focus on firms with robust balance sheets, consistent earnings, and limited reliance on tariff-affected supply chains. Monitoring economic indicators. Stay informed about economic developments and be prepared to adjust your portfolio in response to changing conditions. Implementation of stop-loss orders. Utilize stop-loss orders to limit potential losses on investments, thereby protecting your portfolio from significant downturns. By adopting these strategies and focusing on companies with defensive characteristics and strong fundamentals, investors can better navigate the uncertainties introduced by the recent tariff announcements.